Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about JS Global Lifestyle Company Limited annual report. JS Global Lifestyle Company Limited offers a diverse range of businesses and services across various segments. At the core of their operations are small kitchen electrical appliances, including cooking and food preparation products such as rice cookers, pressure cookers, induction cookers, air fryers, blenders, soy milk makers, and food processors. In addition to these products, the company also provides cleaning appliances like upright vacuums, cordless and corded stick vacuums, and other floor care products. They also offer a range of small household appliances including water purifiers, water heaters, thermos, and hair dryers. Beyond product sales, JS Global Lifestyle Company Limited offers various services such as enterprise management, advertising and consultancy, marketing, supply chain management, administrative support, procurement, and office support services. The company is also involved in housing leasing, research and development of water purification equipment, IT development, home appliance installation and maintenance, retail of home appliances, and e-commerce business. The company operates under the Shark, Ninja, and Joyoung brand names and has a presence in mainland China, Japan, Australia, New Zealand, and internationally. With its diverse range of products and services, JS Global Lifestyle Company Limited is well positioned to cater to the needs of consumers across various markets. JS Global Lifestyle Company Limited market capitalization of $6 billion is significantly larger than the average industry peer of roughly $0 billion. This shows that JS Global Lifestyle Company Limited holds a significant advantage in their industry. JS Global Lifestyle Company Limited trades at a higher price-to-book ratio of 1.46 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 54% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has declined over the past 5 years, but operating income remains positive. The equity weakness may stem from capital structure changes such as buybacks or dividends rather than operational deterioration. The company has consistently reduced its share count, reflecting a shareholder-friendly approach to capital allocation. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth can be attributed to several key factors. In Australia and New Zealand, revenue increased by 73.2% in 2025 compared to 2024, while Japan saw a significant rise of 41.2%. South Korea also experienced a notable increase of 29%. These regions contributed significantly to the overall revenue growth. On the other hand, revenue decline drivers were evident in certain areas. In other countries/regions, revenue declined by 46.7% from 2024 to 2025. Additionally, two major customers, Customer A and Customer B, saw their revenue decrease by 2% and 58%, respectively. These declines had a substantial impact on the overall revenue. The financial report also highlights that revenue growth was largely driven by the sale of goods and sourcing services, which experienced significant increases of plus 213% and plus 212%, respectively. However, other factors such as interest on lease liabilities and share award expenses decreased, while other finance costs increased. These fluctuations had a notable impact on the company's overall financial performance. The net income of the company underwent significant fluctuations in recent years. Initially, it experienced a substantial decrease of 313.6%, resulting in a net loss of $18.8 million. However, this was followed by an increase of approximately 4.6% year-over-year, indicating some improvement. Nevertheless, the trend reversed again, with no profit achieved in 2025. In terms of profit margins, there were mixed results. The gross profit margin increased by 0.2 percentage point to 32.2%, while adjusted EBITDA and net profit saw significant increases of 253.6% and 338%, respectively. However, the gross profit margin on sales to third-party customers decreased by 0.5 percentage point to 33.5%. Furthermore, certain segments, such as Joyoung and SharkNinja APAC, experienced declines in their gross profit margins. The contrasting trends in net income and profit margins suggest that the company's financial performance is complex and influenced by various factors. While some areas showed improvement, others experienced setbacks, highlighting the need for a more nuanced analysis to understand the underlying causes of these changes. The company's financial performance indicates a consistent trend of generating positive operating cash flow. According to the provided data, in both 2025 and 2024, the company has reported positive operating cash flows of $556,347 and $359,580 respectively. This suggests that the company is successfully managing its operations to produce sufficient cash to meet its financial obligations, indicating a stable and healthy financial position. The company's debt level has undergone significant changes over the past year. Initially, there was an increase in interest on bank loans from $0 to $1.5 million, and total finance costs rose by 27.3% year-on-year. This trend continued with a substantial increase in total borrowings from $15 million to $80 million, and interest-bearing bank borrowings, current portion, jumped from an unknown amount to $50 million. Furthermore, the company's total bank facilities increased by 50%, rising from $100 million to $150 million. Interest-bearing bank borrowings also saw a significant increase, with figures ranging from $49,952 to $149,952,000 across different pages. However, there was an instance where interest-bearing bank borrowings decreased from $79,952 to $0. In terms of interest expenses, the company experienced a notable decrease in 2025 compared to 2024, with a significant drop of 91.7% year-on-year. The interest expenses for 2025 were reported as $300, while for 2024 it was $3,593. This indicates that despite an increase in debt levels, the company's interest expenses have decreased substantially in recent times. The performance of various segments and regions within the company has been notable, with some standing out as particularly successful. In the Asia-Pacific, APAC, region, SharkNinja and Joyoung have emerged as top performers. The SharkNinja APAC segment saw a significant revenue growth of 55.6% year-on-year, indicating strong market demand for their products in this region. Joyoung also demonstrated impressive performance, with a revenue share of 62.2% and a modest revenue growth of 1.1% year-on-year. These figures suggest that Joyoung has established itself as a dominant player in the APAC market, with a strong customer base and consistent sales performance. Overall, these results indicate that SharkNinja and Joyoung are leading the charge in terms of revenue growth and market share in the APAC region. Management is projecting a positive outlook for the company, driven by consumer demand for high-quality and functional products. The industry is entering a phase of high-quality development, which the company aims to lead through innovation and the launch of new products equipped with cutting-edge technologies. The company's growth strategy has three dimensions: expanding existing categories, launching new ones, and entering new markets. This approach is rooted in deep consumer understanding, allowing the company to provide tailored product offerings at optimal value. Management is optimistic about the company's prospects, citing its ability to meet consumer needs and identify opportunities for expansion. The company will also focus on instant retail, coordinating offline and online channels, and selectively expanding into emerging niche markets. This strategic approach is designed to drive sustainable long-term growth, positioning the company for continued success in a rapidly evolving industry. The company has indeed paid dividends in the past. Despite an initial statement that no final dividend was paid for the year ended December 31, 2025, other sections of the report confirm that dividends were paid. Specifically, it is stated on page 95 that dividends were paid, and further clarified on page 144 that final dividends are recognized as a liability when approved by shareholders. This indicates that the company has a history of paying out dividends to its investors. There are concerns about inventory buildup or supply chain disruption affecting the group's operations. The global supply chain is exposed to various risks, including trade policies, geopolitical tensions, raw material price volatility, and logistics constraints. These factors can disrupt the flow of goods and materials, impacting the group's ability to meet demand. Furthermore, a closer look at the inventory levels reveals a potential issue with supply chain management. Despite a decrease in raw materials inventory, there was a significant reduction in finished goods inventory, indicating that products may not be moving through the supply chain as efficiently as expected. This could lead to stockpiling and increased costs for the group. That concludes the financial summary for JS Global Lifestyle Company Limited. Feel free to comment below, and I will be happy to answer them when possible.